Hello there, Tom Jeffries, Hotel Vancouver, the 10th Annual Agora Wealth Symposium. This year's theme, A Decade of Reckoning. And the Agora team always brings on Rick Rule to talk to the investors about commodities, etc. And Rick is putting his team together of great investment opportunities here at the show. Rick, it's always good to see you.
It's always a pleasure to be with you.
First question I have is, we're getting about 0.25% of our GICs. We're getting nothing for our investments. Will we time to get back into hard assets again?
No, I don't think so. I mean, I am always invested in extractive and resource businesses with a substantial amount of my investable funds. And as you know from prior interviews, I always have some bullion. Right. I would maintain some liquidity, however. My outlook for the markets is fairly bleak personally. And I think making 2% on your cash might be preferable to losing 30% in the market on a going forward basis. Of course, if I'm right, and if we have a fairly severe downturn, you'll want to have some dry powder to take advantage of the distress of people that didn't plan as well.
Let's talk about planning. Over the last couple of years, for sure, we've seen a really tough time in the resource sector. November lows, now we're starting to move back up. Do you think we have a little bit more strength at our, say, let's start with base metals. How are they looking?
Base metals are very strong. I'm suspecting that they're going to look less strong going forward. I think a lot of the strength, in particular zinc, nickel, and copper, has been due to Chinese physical buying. Mm-hmm. And I suspect, at least with regard to the copper, that the Chinese physical buying is over. One of the things that happened is that there was pretty aggressive reduction in productive capacity in base metals late last year, and I think that has certainly helped. Further production curtailments would probably change my mind and make me more constructive towards those metals. But I note that the overall economy, these green shoots that people keep talking about, seem to me to be mostly figments of people's imaginations. The unemployment numbers on a global basis are bad. Worldwide freight rates are bad. People have to have some money to buy things, which they don't. People have to buy things in order for base metals to get used, and they aren't. Mm-hmm. So the overall economic outlook, as far as I'm concerned, is not constructive towards base metals in the near term.
I was very interested to find BHP Billiton had just opened a huge concern in Western Australia, spent $1 bazillion. It was open 8 months. They shuttered it up all of a sudden. Hey, I thought they were going to be feeding China, Rick. That
is very constructive. When you have productive capacity that is brought offline to balance markets, it's very, very, very healthy for the industry. Ravensthorpe, which is the mine that you're talking about, is a high-cost nickel mine.
Yeah, I know it's high cost. Yeah.
It's one that's going to lose the last man standing,
really?
Last man standing game. I think that Ravensthorpe will be brought back onto production by somebody 5 years from now or 6 years from now. And as you suggest, I think the principal buyer of that feed stream will be Southeast Asian, South Asian, and East Asian, but not now.
Talk about Dr. Copper. It was, you know, it's always been an indicator from EC 101. I was told keep an eye on copper. Recently, it's been pointing ahead, saying things are fairly well better. But would that be pointing towards, say, precious metals as opposed to base metals, silver and gold?
Well, I have a sense of humor for gold because I consider it to be a store of wealth and a form of insurance, rather than a commodity that you use to build things out of. Right. I sleep nights and stay calm better owning gold. I'm in the odd position of owning a fair bit of gold and hoping it doesn't go up in price.
Why so?
The set of circumstances that would cause gold to go to $2,000 an ounce would be so unsettling that it would change my way of life. And my way of life is very good. Gold is catastrophe insurance. And I don't have any policy that I know of in the world that I want to get paid off on. Life insurance assumes someone died. Auto insurance assumes that you had a traffic accident. House insurance assumes that your house burned down. You want to make sure that you get paid if something goes wrong, but you would prefer not to collect on the policy. Gold for me is catastrophe insurance, and I would really prefer to avoid catastrophe.
It's very interesting put. I've never heard it put that way. We're looking here in British Columbia, some pretty tough times. We've got forestry reserves, et cetera. We don't have business there. Mining's having trouble. Petroleum's having trouble. Even tourism. Yeah, the other thing I look at is, well, gee, we have all these reserves we could be selling, coal, et cetera. Do you think the export countries, the COMDOL countries like Australia and Canada, are going to have a bit of a struggle the next couple of quarters?
I think so, only in the sense that your society's got used to strong commodities prices. And the electorates in countries like Australia and Canada came to believe that the countries were well run because they were generating a surplus off commodity revenues. They weren't well run at all. They had a whole bunch of money coming in. So you had, if you will, the Denmark disease. I don't think there's anything at all wrong with Western Canada other than people's expectations. In the coal business, you are not a low-cost producer. You're a high-cost producer. You could be a low-cost producer, but you haven't taken the steps necessary to be that. In the forest products business, in the second quality lumber, you people are terribly high cost. You know, if you compare the cost of producing fiber in the interior of British Columbia with producing fiber in the southern United States, you have a tremendous cost disadvantage. On the coast, you have one of the best fiber reserves, high quality fiber reserves in the world. But your labor cost and capital cost structures and your regulatory structures are very high. And what you sell that stuff for, which is single family construction in California, your market can't buy, so that's problematic. What you have in BC, as far as I'm concerned, is one of the finest lifestyles on the globe. And to the extent that the citizenry of British Columbia and the electorate in British Columbia decided that what they were going to do was capitalize on that lifestyle and make this a fiscally attractive place for rich people internationally, entrepreneurs to live, you would have a boom in British Columbia that would defy description. Switzerland on steroids.
Oh, I'd love to hear that. What is the, for people who don't know, Mr. Rule's been educated both in the United States and here in British Columbia. What has been the advantage of having your feet in both camps?
Vancouver's been extremely nice to me. I like Vancouver. I've been part of the Vancouver business community since I was 18, which is a long time now.
10 years ago.
Yeah, right. This is a community that if you're going to be involved in mineral exploration, you have to have a foot in.
Right.
What's been interesting for me is that I grew up knowing the sort of old lions, the Peter Browns and Bob Hunters of the world, right. And they grew into positions of prominence in the industry that I'm in, which has been extremely useful for me. People that I know very well on a personal basis are people that I do business with now every waking day, and that's useful.
One of the people we love talking to here on HowStreet.com is Bob Hoy, a good friend of yours. And Bob was talking in quite humorous terms about where we are in the markets. Let's talk about the big board, the Dow. You mentioned earlier, the sucker rally. What's holding up these rallies of the equities? Because a lot of people don't want them from Adam.
Well, a lot of people that you talk to. But one thing that's holding them up is liquidity. There is a lot of liquidity in the system. There's a lot of money on the sidelines. People around the world want to believe in the political message, which is hope. Right. I don't happen to believe in it, but that doesn't matter. People want to believe in it. I'm more concerned about the local markets. One thing about the Dow is that these businesses actually have value. Most of the mineral exploration stocks that trade on the Toronto Stock Exchange Venture have no value whatsoever. I'm much more concerned about the TSXV than I am the New York Stock Exchange. Because if the New York Stock Exchange comes off, which I believe it will, some of those companies will rebound because they have underlying earnings potential. The market that scares me to death is the mineral exploration sector, where probably 80% of the listings are absolutely devoid of any value whatsoever. They're floating abstractions.
Well, the best line I've heard about the resort stocks juniors is from Mr. Rule called, they're just like burning matches. You've got to be very careful. Rick Rule has been our guest, all too short as usual. And by the way, if you're looking for a broker and you're an American, perhaps you'd like to talk commodities, I think Mr. Rule would be your good choice. Rick, it's good to see you, always in Vancouver. Thanks for your guidance as per usual.
My pleasure.
Mr. Rick Rule, along with Rick Rule, I'm Tom Jeffries here at HowStreet.com's YouTube channel at the Hotel Vancouver. Thanks for watching.
Comments made on HowStreet Video and HowStreet.com are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at HowStreet.com. HowStreet Video is a production of HowStreet Media Incorporated.